prayer, but it still seems weird to record a prayer for some reason. Don't know why. Anyway, so I guess I have a couple general things to go over. The first one, I'm going to share my screen with you. Let's see. It's being difficult. All right. So I hope everybody can see my my desktop here, or not my desktop. So I'm on the home page of the class. This chapter we get into debits and credits and trial balances and normal balances, and I feel like they kind of drop a big bomb on everybody all at once. Like it's just everything hitting you all at once, a bunch of really hard things and kind of with very specific language of accounting involved in them. And so so I wanted to show you down in the additional help. So if we go down into the, if we click on modules and then scroll all the way down to where there's the additional study content. Right
yep,
here.
I did
that. This debit and credit rules reference sheet is a tool a lot of people find really helpful because it just summarizes all of those rules about debits and credits that we're going to talk about a little bit more here in a minute. But it summarizes them all on one sheet, and that seems to help people, you know, kind of as a just an assistance tool. But you're going to have to memorize these rules with debits and credits. I mean, there's no way around it. This is just fundamental to the accounting process. And so the good news is after you use it for a while, it becomes really easy and you wonder why it was ever hard for you. But in the beginning, it is pretty challenging. So I just want to show you that tool was there. And then one other thing, because I already have people forgetting which homework support assignment they signed up for. Right here, also at the very bottom of the modules and student resources is the homework support presenters link. And that'll take you to a document that shows all the presenters and which weeks and assignments they signed up for. And then one other clarification, I had somebody ask me if they're supposed to present each week. And the answer is no, you're just supposed to present on the weeks that you signed up for. And so each person will have 2 weeks that they signed up for. And then the other question someone asked me is, where do we find these questions that they have to do presentations on? And the answer is these items, exercise 3.5, or like for next week, it'll be exercise 4.5 and exercise 4.23. Those are part of the homework set. So you don't have to go looking somewhere else for them or trying to find them in the ebook. They're just one of the items on the homework. So you're actually doing one of the homework problems for, you know, working it out for your fellow students.
So 4.23, I'm sorry, could you just clarify that for me? You're saying that the homework, just clarify that again.
For example, exercise, so this one here, week 5, chapter 4, exercise 4-23, that will be part of the homework assignments for chapter 4, either homework 1 or 2. I don't remember which one it's in, but it's part of the regular homework assignment, not a separate problem. It's separate from the homework.
So the presentation is on something that we're doing in homework.
Correct. That seems to confuse people, so that's why I wanted to bring it up. All right, so there's sort of my general information. Any questions about general things that aren't specific to the chapter material yet? So just any other general questions? Okay, so if we don't have any others, and also just so you know, I don't have, usually I'm on a dual monitor setup. I'm at home today with my laptop, so I'm a single monitor. I know
So
it's a
it doesn't
first
matter
world
which
problem.
day. I'm sorry, does it matter which day to put my name down for the presentation? Is it going to be in a group or this is individual?
So we already signed up for these presentations last week when we did the homework support sign up. So that was
Oh, right. So I see I saw my name. Okay, right.
There you are, yeah.
So
So you're not until week 8 and then again in week 13.
okay, twice, right. Okay. But is it just me or will I be with a group?
So it's just you presenting to the rest of the group. And so you'll create a
Oh,
video
geez.
or a handout
Oh, wow.
or whatever you want. Some people just create a PowerPoint and just share that or whatever works for
Okay.
you.
Okay, great.
Okay, so this PowerPoint that I have today is going to be a little bit more than what I normally have. I usually try to limit it to about, I don't know, 8 or 10 slides maximum. And there's more like 19, I think, in this little deck today. But that's because this chapter has so many new concepts. And so I just want to, my computer is telling me something. Let me make sure I'm okay here. All right. So I just want to make sure we cover these concepts. So at the beginning of the chapter, they sort of talk about analyzing transactions. And when we talk about analyzing transactions, all we really mean is to recognize what accounts are being impacted and how they're being impacted. So I have a couple of example transactions that we'll analyze as part of this process. And so here's the first transaction. This is a brand new company. October 1st, cash of $10,000 is invested by investors in exchange for $10,000 in common stock. And so if we're going to be analyzing the transaction, I'm just going to be saying, okay, what accounts are impacted? If the investors are putting money into the business, then the business is going to have more cash than it did before. So we have cash being impacted, and then common stock, which represents money paid in by the investors or the shareholders, stockholders. And so my analysis would be that cash goes up or increases by 10,000, and my common stock account increased by 10,000. An important feature of this sort of analysis is that we still are bound by this fundamental accounting equation we learned about in the previous chapter. So our assets have to always equal our liabilities plus our stockholders' equity. So there always has to be at least two things happening, two accounts being impacted, and our assets must always equal our liabilities plus our stockholders' equity. So there's our first transaction. Let's see. So here's the second transaction. On October 1st, Sierra borrows $5,000 from Castle Bank by signing a 3-month, 12%, $5,000 note payable. So we have our cash increasing because we're borrowing money, and our notes payable increasing. Sometimes this confuses people because they think if I owe the money, it should be a negative, but that's not how it works. An increase to a liability means the amount we owe someone else is increased. So again, we see our assets go up. So now our total assets are 15,000, and our total of liabilities plus stockholders' equity are 15,000. One more example. October 2nd, Sierra purchases equipment by paying $5,000 in cash. So now if we're buying something with cash, our cash will go down, but our other asset, equipment, will go up. And so again, I'm going to say I now have 10,000, 15,000, minus 5 makes 10,000, plus 5,000 gives me a total assets of 15,000 and a total liabilities and stockholders' equity of 15,000. So all we mean when we say analyze is ask ourselves what accounts are being impacted and are they increasing or decreasing? So that's the first process of recording transactions from an accounting sense. So I'm going to move on to another concept. Any questions about this concept of analyzing transactions?
So you were saying that the two things that are impacted, could you the assets. And then could you go over that just one more time? You said the two things that are always
Yeah, so there's always
impacted.
at least two accounts impacted. So in each of these transactions, there were two accounts impacted. In the first one, it was cash and common stock. Cash is an asset account. Common stock is a stockholder equity account. In the second transaction, we had two accounts impacted, cash and notes payable. Cash is an asset account and notes payable is a liability account. In the third transaction, we had two accounts impacted, our cash account and our equipment account. Cash is an asset and equipment is also an asset. So that's what I mean when I say there's always at least two accounts impacted.
Okay. Okay. I'm still I'm still like trying to process. Okay. Okay.
So this takes us to what are called debit and credit rules. So when we record these transactions in our journal, and a journal is just like you think of a journal for writing down your thoughts. Well, we have an accounting journal where we chronologically write down the accounting transactions that occur. And so when we do that, we record our transaction either as a debit entry or a credit entry. So the first thing you have to know about debits and credits is that any rules you've heard about the terms in the past are probably wrong. That people tend to think of debits as decreasing because they use their debit card and it takes money out of their account at the bank, and they tend to think of credits as increasing, but that's not really true. All the term debit means is an entry on the left side of an account, and I'll talk about what left and right means here in a minute. But just think of it as a directional term. When we do a debit entry, we're entering it on the left. And when we do a credit entry, we're entering the entry on the right. Some accounts are increased with a debit or an entry on the left. Asset accounts are increased with a debit. Expense accounts are increased with a debit. And though it's not on this page, also dividend accounts are also increased with a debit, which means they'll be decreased with a credit. Conversely, other types of accounts are increased with a credit. So liability accounts, stockholders' equity accounts, and revenue accounts are all increased with credits. So that means they're decreased with debits. One term that's going to come up in the exam and in some of the homework is the term normal balance. And all normal balance means is it's the balance you would expect an account to have. And so the secret to this is just recognizing that these accounts are always positive. In other words, we don't ever have a negative account balance. We either have a debit balance, a balance on the left-hand side, or a credit balance, a balance on the right-hand side. And so the normal balance is always the side of the account that increases it. So for assets and expenses and dividends, the normal balance will be on the debit side. And then for liabilities, stockholder equity, and revenue accounts, the normal balance will be on the credit side. Okay, so that's pretty abstract. I've just told you all these rules, but we haven't really put them into motion or into action. This system was invented by an Italian monk like in 460 AD. And really it hasn't changed since then. We use computers to do a lot of the work now, but still the same process of having debits and credits. And for every transaction, our debits have to equal our credits so that they always balance. This system has been essentially unchanged since about 460 AD. So sometimes it makes you wonder why you have to pay all this money for a new textbook when they haven't changed it that much. Okay, so now I'm going to go through a number of examples that take us through the whole recording process. Okay, and I'll start with the same transactions or events, they call them in this book, that I used for the examples ahead of time. So here's the steps over the side. We're going to determine what type of account is involved. We're going to determine what items are increased or decreased and by how much. And then we're going to translate the increases or decreases into credits. Another way of saying that is we're going to do a basic analysis, which is what I showed you just a moment ago. Then we're going to do an equation analysis, which means we're going to ask ourselves what's happening to the accounts. Then we're going to make our debit or credit, apply our debit and credit rules. And then we'll record it in what's called a journal entry. I know some of you have been working on the homework already this week, so you've probably had some practice at this. Finally, at the end of a period, we'll post our journal entries into what's called our ledger. And our ledger, if a journal is a chronological recording of transactions, our ledger is our means of keeping track of the balance of each account by posting all of the transactions that occurred in that account. So let me take you through a couple of examples, and then I'll maybe pause for questions if we have them. So here's our first example. October 1st, stockholders invest $10,000 cash in an outdoor guide service company to be known as Sierra Corporation. So my basic analysis again is that money's coming in from the outside, from the stockholders. So the cash of the company is going to increase. And then the common stock account is also going to increase because it represents money invested by the stockholders. So my equation analysis is just going to say cash goes up by 10,000, common stock goes up by 10,000. So now I have to translate this, or whatever term you want to use, into debit and credit rules. So I'm going to remember cash is an asset account. Assets increase with a debit and decrease with a credit. So I'm going to need to debit my cash account 10,000. And then common stock is a stockholder's equity account. Stockholders' equity accounts increase with a credit and decrease with a debit. So I'll need to credit my common stock account. So once I know that, I'm ready to create my journal entry, which will be a debit to cash. Remember I said debit means the entry's on the left, and I'll credit to common stock. So that's the one on the right. You'll notice that on these journal entries, the debit entry always gets listed first, then the credit entry, and then typically there's some type of note. This one says issued stock for cash. I'll tell you in real life, we don't usually put notes unless we think the journal entry is ambiguous in some way and needs clarification. So there's a lot of journal entries that just get entered without notes because anybody looking at it who's done it could see what's happening. All right, so once we've created that journal entry, then we're ready to post those to the ledger, which means we're just going to make, this is called a T account because it looks like a T. And there's one for each account. So our cash account, we're going to show that there was a debit to cash of 10,000 and a credit to the common stock account of 10,000. And this lets us know the balance of the accounts at any given moment. That's why we post. All right, so that was a lot of information. Questions about this? I'm going to go through several more examples just so you know. All right. So let's look at a second example. October 31st, they borrow cash of $5,000 by signing a 3-month, 12% $5,000 note payable. So again, I have to ask myself what's happening here. Cash is going up 5,000, and then my liability notes payable is also going up by 5,000. And so that's kind of what my equation analysis tells me. Cash increases by 5,000, notes payable by 5,000. So then I'm ready to say, okay, cash is an asset. Assets increase with a debit. So I'm going to debit my cash, 5,000. And liabilities, notes payable is a liability, and liabilities increase with a credit. So I'll credit notes payable by 5,000. Then I'm ready to make my journal entry, which shows a debit of cash, credit of notes payable, a little note on what's happening, and then I post it to the ledger. So you can see now I have 2 postings in the cash account from that first transaction of 10,000, now an additional 5,000. Here's our third example. We use $5,000 cash to purchase equipment. We ask ourselves what's happening. My asset equipment will increase by 5,000. My asset cash will decrease by 5,000. My asset debit or equipment is an asset account, so it increases with a debit. So we'll be debiting asset equipment, and cash is also an asset and it decreases with a credit. So we'll be crediting cash. And so there's our journal entry, a debit to equipment 5,000, a credit to cash of 5,000. Then we post to the T accounts. All right, a few more examples here till we're sick of them. Let's see, on October 2nd, they received $1,200 cash advance from a client for guide services for multi-day trips that are expected to be completed in the future. So in this case, we received money, so our cash is going to go up, but we have not yet earned this revenue because we're expecting to do that to complete the service in the future. So instead, we're going to post this to an unearned revenue account, which is a liability, which just all that means unearned revenue is it means money I've received but have not yet earned. Okay, so cash is increasing, and the liability unearned service revenue also increasing. Cash is an asset, which increases with a debit. Unearned service revenue is a liability, and liabilities increase with a credit. So our journal entry will be to debit cash, credit unearned service revenue, and then post it to the ledger. All right, next event, we received 10,000 cash from the Copa company for guide services provided. So here we've actually earned this money. Our cash increases by 10,000 and our service revenue increases by 10,000. Cash is an asset, so it increases with a debit. Service revenue is a revenue account, so it increases with a credit. So we'll debit cash 10,000, credit service revenue 10,000, and then we'll post that to the ledger. So I'm picking up the speed here. If anybody's feeling like they have a question, don't be afraid to jump in and ask it. There's a few more of these examples. Well, I'm lying to you. There's like, you can see there's like 11 of them, but they're just helpful to see several of them, I think. Sierra pays office rent for $900. So if I'm paying money, my cash is going down. And then my rent expense is going up. So this also confuses people because you think, oh, it's an expense. Again, it should be a negative. But expenses, if you think about it, they're actually a negative to stockholders' equity. And so because they're a negative to stockholders' equity, and stockholders' equity typically increases with a credit, expense accounts increase with a debit, which has the effect of reducing our stockholders' equity. So that can be kind of complicated to think about. So if it is, then all you have to think of is just remember rent increases with a debit and decreases with a credit. So I'm sorry, expenses increase with a debit and decrease with a credit. So I have this rent expense. I'm going to debit the rent expense account, and I'm going to credit the asset account cash because cash is going down, and that'll be my journal entry. Rent expense 900. So anytime you pay an expense, consider the logic of this. Anytime you pay an expense, your expense is going to go up. That's always going to be a debit, and your cash is going to go down. Now that's going to be a credit. The only other way to pay an expense is by, having a loan. Like somebody says, you can pay me in 30 days, and then you would debit the expense and credit the account payable. So anytime you have an expense transaction, you're going to debit the expense and then credit either cash or accounts payable. That's a pattern you'll see over and over and over. And then we post that to the ledger, and we're good. All right, October 4th, we pay $600 for 1 year's worth of insurance. This is a little tricky because when we prepay insurance, we pay for a whole year's worth, this creates an asset account called prepaid insurance. So our cash is going to go down and our asset account prepaid insurance will go up. So we'll debit prepaid insurance asset and we'll credit the cash asset. So there's our journal entry. A couple more. We purchased an estimated 3 months of supplies on account. So again, we have an asset called supplies increasing, and this is on account. So we're not paying for cash. Whenever it says on account, it means we're borrowing money. So our accounts payable, which is a liability, is also going to increase. Assets, supplies is an asset, increases with a debit. Accounts payable is a liability, increases with a credit. So there's our journal entry. All right, on October 9th, we hire 4 employees to begin work on October 15th. Each employee will receive a weekly salary of $500. So this is kind of a trick question because when we hire someone, it doesn't create a financial transaction. So there won't be any journal entry for hiring them until they start earning money, right? Then we'll have a financial entry. Tricky, wily, you tricksters. All right. On October 20th, we pay a $500 cash dividend to stockholders. If we pay a dividend, our cash is going down. Our dividend is increasing. Dividends increase with a debit. Cash decreases, assets decrease with a credit. So our journal entry is debit of dividend on dividends for 500 and credit cash for 500. All right, I think this is the last one. Thank goodness, huh? Sierra paid employees $4,000 in cash. So we know our cash is going down and we know our salary and wage expense is going up. So again, like I just said before, expenses get debited. So we're going to do salary and wage expense debit of 4,000, and then our cash is decreasing. So our cash is going to be credited 4,000. All right. So this is a summary of all of the journal entries we just made. Well, this and the next page. But so you can see all of these different things we did. And they're always in this format with debits and credits. And the debits always equal the credits. That's the rules. If you have a journal entry where the debits don't equal the credits, it means you have an error and you have to figure out what that is. So, and then here's a summary of our posting. So now you can see all these transactions we posted to cash. At the end, each of these accounts has a balance. So cash, we would say the cash account has a debit balance of 15,200. You can't say a positive balance or a negative balance, just that it has a debit balance. The way we find this balance is we add up both sides, the debit side and the credit side, and then whichever side is bigger, we take that side and we subtract the smaller side from it. So for cash, we would add all of these up. 10 plus 5 is 15, 16.2, so 26,200. And then this side adds up to 11,000. So we would take 26,200 minus 11,000 would give us a debit balance of 15,200. So again, the process of finding the balance of the ledger accounts, these T accounts, is to add up both the debit and credit side and subtract the smaller side from the larger side. And then the balance will go on the larger side. For accounts like supplies, there was only one entry. So supplies is going to have a balance of 2,500. We would call that a debit balance. Prepaid insurance, a debit balance of 600. Equipment, a debit balance of 500. Notes payable has a credit balance of 5,000. Accounts payable, a credit balance of 2,500. Unearned service revenue, a credit balance of 1,200, etc. You'll also notice these are always in the same order, with assets followed by liabilities, followed by stockholders' equity, then dividends, then revenue, then expenses, always in that same order, which happens to be the same order that your trial balance is in. Again, your assets get listed first, followed by your liabilities, followed by your stockholder equity accounts, your dividend accounts, then your revenues and expenses. Your debits and your credits have to add up, they have to balance each other. If they don't, it means you have an error somewhere. Okay, I know that was long and fairly painful, and I apologize for that. Questions I can answer about what I just went through there. And if I broke your brain so that you're like, I probably have questions, but I don't really know what to ask. Well, just know if you do this every day for like 20 years, you'll be really good at it. That's like anything, right? The more you do it, the better you get at it. Any questions I can try to answer, or problems you'd like me to work out in the homework or elsewhere?
I have a question.
Okay.
So in the textbook, I think it's like the first page, like the 3.1, it gives like examples. So it'd be like cash or rent paid in cash. And then it says, it gives an example as, okay, this will increase. Is it the same for a certain type of transaction, if that makes sense? So like, they pay rent, is that automatically like a certain form, if that makes sense? Does it always affect the same things?
Yeah, no, good question. So yeah, and that's part of the reason why, you know, my joke of if you do it every day for 20 years, you'll be good at it. The reason that's true is because there's patterns there and it starts to be repetitive. You know, most of what businesses do is they pay expenses or receive revenue. If you think about it, that's most of their day-to-day operating transactions are revenue transactions or expense transactions. An expense transaction always looks the same. It's a debit to an expense account and a credit either to cash if you paid in cash or to accounts payable if you haven't yet paid and you're going to pay in the future. Revenue entries always look the same. It's a debit to cash because your cash is increasing and a credit to your revenue account. Or if you don't get paid at the time you earn the revenue, then it's a debit to your accounts receivable and a credit to your revenue. So the short answer to your question is, yeah, after you do it several times, you'll realize all expense transactions look the same and all revenue transactions look the same with only a couple of options. Of course, in this course, they're going to try to hit you with every weird transaction that you'll ever see too, because they want to make sure you understand how liabilities work. But you know, a lot of small businesses, they have like maybe one loan and then they just make a payment on their loan once a month. So it's not like you're entering all these crazy loan transactions all the time. You're just doing it once a month. And then, you know, in real life, you're just sort of repeating that transaction each month over and over. So short answer is yes, you'll see patterns. I think that's what you're asking. Is that right, Maddie?
Yes, that's what I'm asking. And it just reminds me of my second question. So, and one of the examples you gave, I think it was like the rent affected common stock, or it affected the stockholders' equity. But I guess like that doesn't, I don't understand how rent affects common stock, if that makes sense. Isn't that just like a two-way payment? I don't,
Yeah,
if that
so
makes sense.
yeah, so there wasn't one where rent affected common stock. Let me go up and see. So rent is an expense. And so expenses will ultimately impact our stockholders' equity in the form of retained earnings. But that's in a future chapter. So really all we need to know now is that we're recording them as a rent. So if we pay rent, we're going to debit rent expense and credit cash. And that's it. When we get next chapter, we'll get to what's called closing entries, and I'll show you how we close out the expenses at the end of the month and post those to retained earnings. But never will it affect capital stock or common stock directly.
Okay, awesome. Thank you.
Other questions or homework problems you're struggling with that we could look at? And it's okay, you know, it's pretty normal for you to have to be like, I really just need to be in looking at the homework first before I know what my questions are. Like that's okay too, right? It's hard to sometimes formulate one until you're working on it, and then you're like, wait, why is this way, or what's happening here?
So, yeah, I have many questions and then like I erase things. So yeah, there's a lot of questions, but I'm not quite sure. It's like mixing them. I'm like mixing them all up right now.
Sure. Okay. Well, I'm okay with ending the meeting here. And you know, or like I said, if somebody has a homework problem they're stuck on, we could look at that. Also, if you ever do get stuck on a homework problem and you email me, I almost prefer it if you ask it in the chat room in the class, because then I can respond there and other students can see it. What I found is usually if you're struggling, there's somebody else who's struggling. and now a lot more people are using that tutor help area where you can post stuff there. I'll tell you, as a teacher, I don't see that as readily as I do the ones in the course. But then the tutors jump on it, and I know a lot of people have said they're helpful too. So there's a couple options, and you can always still just email me if you're like, I don't want the world to know I stink at this problem. But I promise you, you're not the only one. Okay. Same with like the exam. If you're disappointed in your score, I promise you, you're not the only one. That was a hard exam, and you've probably, I mean, you guys probably heard before you got into this class that the exams are hard, and that the class is hard, and it is frustrating. What I don't like about our exams is they feel so different than our homework. The homework feels one way, and then the exam questions feel different, even though it's written by the same textbook publisher. And I have limited control over that, and so it's just what it is. I don't know. So I teach this course at another college, and then I teach also for Arizona State University, and they were telling me that they wait this course until people are in like their third year of college, and I teach this course for freshmen at the college we're at, and our face-to-face classes, we have about an 85% pass rate, but our online classes, it's more like a 65% pass rate. So it's just hard to do online. Okay, but you guys can do it. Okay, like it's people pass it, so don't get discouraged. And also, if you didn't see it early in the course, I posted like the secret to succeeding in this course. And what I said in that was that you can fail the exams and still pass the class. Okay, so like if I'm not saying you should try to fail the exams, I'm saying if that happens, don't give up all hope, because you can control your homework scores. You can take those, you answer each question up to 3 times. So usually you can get a 90% or better on the homeworks if you can invest the time. You can control all the other work, the homework supports and all of those things. And so if you get A's on the things you can control, then even if you don't do as well on the exams as you'd like, you can still pass the course. And typically when people don't pass the course, it's because they're not doing the homework and that stuff. Because a byproduct of doing the homework until you have an A on it is that you also tend to do better on the exams. But you know, I know it's challenging. I don't want you to get discouraged. I want you to know that even if you didn't do well on that first exam, you can still do fine. Okay. Any other questions, specific or general, before we close the meeting? I'll try not to monologue on you again. Sorry. Okay. Then can we, Fayaz, do you want to hang out after the meeting and visit for a second? You were saying you had some questions. Yeah.
Yes, please.
Okay.
Yes.
Okay.
Okay.
Anybody willing to offer a closing prayer?
I can do it.
Terrific. Thank you.
Dear Father in heaven, we are grateful for this class. We are grateful for permitting us to come in and expand our knowledge. And we are grateful for the opportunity that we have to continue our education. And we are grateful for the teachers and the books that we have to be able to learn this subject. And we ask thee to please help us be more intelligent, help us retain, help us memorize, help us understand, and help us apply all the things that we are learning. Help us have the time enough to be able to do all our classes, and not only that, to also succeed and to pass all our classes. Please bless our families and bless our homes for them to be a little piece of heaven. And we say these things in the name of Jesus Christ. Amen.
Amen. Thank you so much. Have a great night.
Thank you, Brother Fox.
Yeah.